You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. Welcome to the show, Keith.
Jim, great to be here.
Noticed oil prices had a nice little bump up last week and then another plunge below $30.
Yes, we're seeing a lot of volatility in the market right now. And really, I think a couple of the statistics that drove that was, I can't remember if it was Wood Mackenzie or what group it was that came out with a statistic that only 100,000 barrels a day have been shut in due to low production worldwide. Jim, we produce 92 million barrels a day, and all of a sudden there's only 100,000. Like that's not even a drop in the bucket. That's like an atom in the universe. It's just nothing. And that is a stunning statistic. And everybody continues to overproduce for a couple of reasons. You know, certainly, if you're offshore or if you're in cold climates or in certain kinds of geology, if you stop producing, you don't know that changes the pressure in the reservoir, and you just don't know, geologically speaking, what kind of impact that's going to have on the reservoir, and it might not come back on anywhere close to the same rate. And this industry is so risk averse geologically, clearly not financially, that they're kind of scared to do that. I think Russia in particular is a little bit nervous about that with a lot of their Siberian oil fields. So there's that reason that oil production hasn't fallen off. And the other thing, Jim, was that, you know, demand is still going up. You know, last year we had a huge increase. We were doing like 1.5 million more barrels a day demand than 2014. And this year we're scheduled to be about 1.25 million barrels a day. So if we lose about 3 million barrels a day to natural declines, that's a 4 million barrel a day change in just 1 year. So everyone's kind of looking at those statistics and going, oh, well, I'll just produce at a loss till demand catches up and let natural declines do what they do. But boy, oh boy, waiting for that. Well, a lot of the industry's been waiting that for a fat 6 to 9 months now, and it hasn't happened. So, yeah, I think that's the reason why we're sitting here at $30 and just bouncing up and down like a yo-yo.
Well, wasn't it the Saudis who really started the overpumping of oil to drive the price down, with their idea being, I'll put the U.S. shale producers out of business?
Well, again, I think that was part of the industry. I think they really were after two groups. I think they were truly after the Canadian oil sands to a large degree. You know, that when they took a big tour of the oil sands 1 or 2 years ago, they were just stunned at the scale of things, and they saw all that big machinery and how much they said, okay, these are the high-cost producers. These are the guys we got to put out of business. But, of course, the problem for them is that, you know, all these multi-billion-dollar decisions that have been made over the last 2 or 3 years, they just keep going. They don't slow down. Like, once they've paid their capital back, they're actually one of the lower-cost producers, like $25, $30. In fact, that's probably closer to $25. So, but for the new CapEx, the new stuff that's just coming on, yeah, that's high-cost production, Jim, but, like, if they've already spent $4.5 billion out of a $6 billion facility, they're not going to stop. Like, they're going to try and ride out the cycle. So that's been one of the Saudis' problems. And then really, Jim, the other big group wasn't so much the shale producers as it was the shale lenders. The zero interest rate policy in the States, you know, debt is just free for these guys, Jim, and they just load it up like mad and grow. And that never would have happened. We never would have had the shale revolution that we've had with 8% interest rates like normal. Even 5%, I don't think we would have had the same. So it's that's who they were really after. And my God, the banks, the financial industry, Jim, just now finally are we starting to see massive credit rating downgrades, junk bond statuses. The banks are changing their revolving loan facilities into term loans. So instead of just kind of renewing it and allowing the producer to have $300 million out, they're saying no, that needs to come down to $200 million or $100 million. And so you've got 9 to 12 months to do whatever you got to do: raise money, sell assets, do whatever you need to do. But the banks were really slow in doing this. And just as we talked about one other week, Jim, you know, a lot of times these producers that owed the banks billions, like Halcon, Floyd Wilson's Halcon down in the States, they basically went back to the bankers and said, look, guys, our debt's trading at 10 cents on the dollar. What we're going to do is we're going to reissue this debt. Instead of us owing you $1 billion, we're only going to owe you $500 million. And we're going to give you a slightly higher coupon. But that debt will trade at 40 to 70 cents on the dollar as opposed to the 10 cents on the dollar. So even though you're taking a 50% haircut on the principal, on a mark-to-market basis, you're going to be ahead of the game, and the banks have had no choice but to. So the financial side of this industry in North America has just been way more, I don't know what the word is, partly innovative and partly just lazy in getting the ship turned around here. And I think that's probably one of the big things that took the Saudis and really the whole market by surprise. Everyone thought that fiscal discipline would come into the patch either from the producers or from the bankers way, way sooner.
Well, the Saudis now, I hear, are in financial trouble. They didn't think these low prices would last this long. Mm-hmm. And
I think the big thing here is that right now you're seeing some of the the two crowded trades right now are shorting the Chinese yuan and shorting the Saudi currency called the rial. And they've pegged it to the US dollar for a long time. And there is no way under the current oil price does the Saudi currency deserve to be there. Like, not even close. Like, it would have to take a 30% minimum haircut. And I'm just pulling that number out of the air. I haven't run any numbers on it, but you don't have to be a rocket scientist to understand that they needed $85 to $90 oil to meet their social policy commitments previously, and now oil's at $30. So, that's a big drop for them.
Obama wants to impose a $10 a barrel tax on oil. Why now on an industry that's suffering?
Well, really, it's going to be placed on consumers as opposed to the industry. So, and it's going to be placed on refined products, not crude. So it's going to be on gasoline, jet fuel, home heating fuel, though they're talking about giving a bit of a discount for that. So the idea here is that people actually aren't going to notice that much difference because they've been paying, their heating bills have come down for a year, but now they're just going to go back up to where they were before. And that's going to create something like $330 billion in new revenue for the American government that Obama says he's going to use for infrastructure and green technology, which, of course, the revenue side is very specific. He's got it worked out to the penny what it's going to cost per barrel equivalent, $10.25. But on the spending side, it's just a big black hole. It's just a big slush fund that they're going to be able to use for pork barrel politics to stay elected. So there's no clarity at all on how that's going to get spent. But you're right, Jim. The timing is so interesting because it's now February 10th, and Obama's done on November 7th. He's a lame duck president from November 7th through till January 23rd next year. But he gets to make this grand pronouncement. He doesn't have to worry about any of the details and how it gets put through. So, and of course, the other thing is that most pundits are saying this has a snowball's chance in hell of making it through Congress. So we'll see. You
said one of the big lies in the energy industry and investments was revealed last year. What was that big lie?
Oh, Jim, the midstream pipeline companies and all the infrastructure companies. So the companies that facilitate oil getting moved around. So pipeline, rail cars, loading terminals, and not just the big trunk pipelines, but a lot of the little gathering pipelines in each of the different basins around the U.S. So these guys sold themselves to the market as saying, hey, we get paid a straightforward fee for handling the oil. We don't own the oil. We don't have any commodity price exposure. And so the street bought into that in a big way in the last 3-4 years. And these companies were able to raise unbelievable amounts of money at crazy valuations, like 14, 15, 18 times cash flow. So whereas the producers normally only trade at like 5 or 7 times cash flow, and the really good ones may be up close to 10. But so what's happened now is these two things have happened. Okay, so both oil and gas prices have collapsed at the same time. And what's happening now is that these companies just don't have the ability to pay, and many of them are starting to get financially stressed. They're trying to renegotiate prices with these pipeline companies, and these pipeline companies have no choice, Jim. They have to renegotiate, and so they do have commodity price exposure. And you can see the charts on, I guess the main thing that investors should go look at is the Alarian MLP Index in the States. So MLP stands for Master Limited Partnership. And that's a much like the Canadian Income Trust of the last decade, a tax-advantaged vehicle that allows these companies to pay out big profits to shareholders. So they say, oh, well, we've only got now only 5% or 7% or 12% exposure to commodity stocks. But the street isn't buying that anymore, and they have sold these MLPs down by at least 50, and normally from the charts I'm looking at, more closer to 80%. So just like the producers. And these investors, they, and with Chesapeake is a good example where this week they talked about bringing in a financial advisor to look at strategic alternatives, which is a very big fancy buzzword for saying someone who can buy the company. So, all of a sudden the pipeline companies that ship out Chesapeake's gas took a big hit because investors know that whoever ends up buying Chesapeake, whether it's out of bankruptcy, whether it's in the market, they're going to be renegotiating those deals, those pipeline charges. Absolutely. That'll be a factor that if that doesn't get done, the deal won't get done. So the market starts to price in lower cash flow for all these companies. And that has just been a stunning change in fortune for these companies that were thought to be pretty invulnerable before. And it's setting up some interesting opportunities now, Jim. Like, I'm actually looking at this sector now because you're seeing yields of 20 and 30%. Now, of course, when you see that, that's the market pricing in risk and really bankruptcy. Anytime you've got over a 20% yield, the market is basically pricing in bankruptcy on these companies. But you've got yields now as high as 50%, where they're literally paying out half their stock price in cash a year. The future for these companies at current commodity prices is pretty grim, but if things ever did turn around, like, wow, particularly for Canadians who, I'm fairly bearish on the Canadian dollar, so it's, to have a 20% income stream in U.S. dollars would be very, very exciting. So I'm looking at a lot of these companies right now and trying to figure out who's going to live and who's not going to live. Because the reality is, Jim, even if these companies end up cutting their dividend a little bit, when you got a 25% yield and they cut it to 20%, well, who cares? That's still an awesome yield for investors.
What about the future of pipelines in Canada? The mayors in the Montreal area don't want a pipeline east. People in BC are up in arms. They don't want a pipeline to the west coast. Where does that put the pipeline industry in Canada?
Well, it's going to make them be very patient. There's no such thing as a Canadian pipeline company, so that's the good news. That all these companies basically have, like even TransCanada, they've got lots of pipelines down in the States, and so pipeline activity in the States is still going ahead quite strongly, and it's only one or two high-profile pipelines that really have been the cause célèbre of the greenies. So it just means they got to be patient. Sadly, this industry has just been so behind the issues here. They've never been able to get out in front of the issues, anticipate potential complaints, and proactively try and deal with them. They've just been complete Luddites. It's been embarrassing to watch. To this day, Kinder Morgan doesn't want to release spill response in Burnaby, and it's just, they've kind of dug their own grave here, Jim, and it's just, sadly, it's costing the Canadian economy literally tens of millions of dollars a day. Not quite as much as it used to, just because the price differential between Canadian oil and world oil isn't that great anymore. But back when oil was $100 and our oil was quite a bit lower, that was costing us easily. I think the one stat that Jeff Rubin came out with was like $30 to $50 million a day. Like it's just that's what the industry is costing us. And I don't agree with everything that the Green Lobby has to say about how we do our energy work. There are some things that truly have changed, and people want to see, want to have a more active role in saying what happens in their community now. The internet gives them that, so the industry has been very slow to respond to that, which has been really disappointing.
Do you have any idea why Kinder Morgan hasn't been more open about spill response? Because even the provincial government, which I'm sure would like to see oil flowing, has made that a condition. You have to show us what your spill response is so people feel confident about it.
Right. No, I haven't phoned up I think the guy's name's Ian Anderson, or Trans Mountain, asking what's the big deal here, boys? Sadly, Jim, everything I hear in the industry says there really isn't that much they can do about it. A spill is a spill is a spill, and I don't know 100% what can actually be done about it, and I think they're pretty embarrassed to talk about that in public. So that's my suspicion.
Well, the fire department in Burnaby says if you put in a dozen more giant oil tanks, we don't have the equipment to deal with a fire there. How come the pipeline company hasn't simply said, well, we'll put automatic firefighting systems in there so you don't have to worry about it? Wouldn't that be a responsible response?
Oh, Jim, it could be, but honestly, I would think that the firefighting techniques on something that big and that chemical would be way beyond my capacity to judge whether something automatic could be done. Or I have no idea. But it would make sense that there should be some type of very targeted, specific, and ready action plan if something goes wrong.
Right, and they just don't have it.
Certainly that's the way it appears. I'd like to think they kind of know what they are doing, but right now it's a pretty tough call to say that.
And of course, the Harper government 2 years ago passed legislation saying the cabinet could overrule any environmental or any board ruling concerning energy.
So I didn't hear that, but
yeah.
Yes, sadly, that government just blew it for all of us. But their intransigence, their unwillingness to work with anybody but the most conservative parts of the industry has just screwed us. And so we'll see if Mr. Trudeau's more collegial, I would say bending over backwards approach does any better. But, I keep thinking, Jim, it only would have taken a little bit of softness on the part of the Harper government to get some action happening. I don't know. Well,
when they ban people from public hearings on the pipeline, what says we don't want to hear bad news any more than that?
Oh, yeah, but Jim, come on. Two things on that front. A, they were filibustering things, so they would just bring in people so that the meeting would last for 22 weeks. You can't run a democracy that way. Democracy doesn't mean that everybody gets to have their entire say all the time. And B, you've got a very specific agenda happening where basically a large part of a very well-organized group of people had said, there is no compromise here. This will not happen, and we will lie down. Again, that's not democracy either. You have to deal with that in the spirit with which it's given to you. So you have to create a condition where both sides are motivated to compromise and be political as opposed to being morally self-righteous.
But banning public from public hearings gives it the appearance of a kangaroo court.
Oh, yeah, Jim, I have to say, I haven't heard of a thing where the entire public was banned. I've heard where they limited the numbers, and
one person was allowed to watch one person give a speech. That's hardly public.
Yeah, if that was the case.
When they show all the empty seats. And I know they said they did it for security reasons. Well, I've been to high-profile court cases where they really did have, security concerns, and those were looked after. So, they could have done it with the public hearings.
Yeah, so really what we're hearing here is that the government is just like the industry. They were Luddites. They were not consultative. They were not really moving forward with the best of intentions and trying to find an answer. And now they're paying for it. And sadly, we're all paying for it. And we're all paying for it in a huge way. We're talking about millions of dollars of top-line revenue and millions of dollars of taxes a day.
Yes, now that, I said, is the sad part, and we know modern pipelines are so much safer than rail traffic, as Quebec could testify with 43 people dead due to an oil train explosion. Mm-hmm. Keith, anything else you wanted to add today?
Well, John, I just, mine really is an investment newsletter. It's not really an oil and gas newsletter, and I would just say that right now we're being very cautious. I think the overall market looks like it's still probably headed lower. Oil might not be headed much lower. The reality is that nobody's making money at these prices, but it'll turn when it turns, and until then, we're not trying to pick any bottoms in the upstream producer stocks. We're really just trying to hold on to the cash we've got and just wait. Sometimes there are times to be active and proactive and go like mad and be 100% invested. Sometimes there are not. This is one of the times.
I think someone said you shouldn't be embarrassed to be aggressively doing nothing.
I like that line. I think that's pretty apropos to this market. The upstream market has been in the funk for over a year. The downstream market over the last 2 months, refining margins have been crushed. Stocks, I was a big shorter of Valero at pretty close to the top, but I covered that short way too soon. And it's just, there's not a lot of places to make money right now. So it will, this is a very cyclical business. It's going to come back, and certain parts are going to happen sooner rather than later. But until we really see something definitive, cash is not a bad place to be.
Keith, thanks a lot for chatting with us.
God bless you, Jim.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investment Bulletin. His website, oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Check out our YouTube channel, Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.